We are joined now by David Resler, Chief U.S. Economist at Nomura Securities. David's one of the most accurate forecasters in 5 categories of data, including unemployment, which makes him a Bloomberg best. And he joins us now from his office here in New York. David, welcome back to Bottom Line. Always a pleasure to have you on.
Good to be here.
David, no net jobs last month. Unemployment rate unchanged at 9.1%. The June and July jobs data revised lower. The average work week declined and hourly earnings fell by 3 cents to $23.09. Is this economy grinding to a halt, or are today's numbers about market volatility from last month? Are we just a shock away from tipping back into recession?
I don't think we're a shock away from tipping into recession, but we are grinding to slower growth. Some of it is, I think, a direct byproduct of what happened in the financial markets in August. We saw in August, as you said, no growth in employment. If we look at private sector employment, that was up 17,000. And unlike the headline number for July, the private sector job number was revised up slightly. Also, bear in mind that in August, there were, I think, 45,000 Verizon workers on strike. Those workers were not in the count. If they'd been in there, it would have been a bigger increase, something on the order of 62 to 65,000. So it's not absolutely horrible, but it's certainly not the kind of job growth you need to bring the unemployment down and to put America back to work.
David, Edward Lazier, the former chairman of the White House Council of Economic Advisors, he told my colleague Tom Keene that although today's jobs numbers were troubling, you shouldn't make too much out of just 1 month's worth of data. But he did say the trends are disturbing, specifically the job opening and labor turnover survey, also known as JOLTS, and that for all intents and purposes, we are still in a recession. Talk to me about the JOLTS data.
Well, I haven't looked at the most recent data, but Ed's right that we've seen very little growth in hiring evident in the JOLTS data, certainly not at this stage of the recovery. And that's really what was the story in the August numbers. It wasn't so much that there was a new round of layoffs or anything of the sort. It's just that I think that the shock of what hit, a different jolt that hit the markets in August, frightened businesses into a wait-and-see mode, and they're going to be in that wait-and-see mode until they get a clearer picture about where the economy's heading. Can be a self-fulfilling prophecy, but for right now, they didn't hire very many people in August. I would like to call attention, though, to some other indicators that aren't quite so gloomy. We had pretty decent car sales once again in August. We're getting a recovery from that setback that we had in the second quarter with after the earthquake hit Japan and depressed supplies and also depressed sales. Sales have come back, and bear in mind that in August, essentially the entire East Coast lost 3 days of sales, or 3 or 4 days of sales at the end of the month because of Hurricane Irene.
Right. David, consumer spending, it accounts for about 70% of the economy. With job creation stalled and wages declining, where will the growth come from if consumers' ability to spend is limited?
Well, that's a good question. I think we are starting to see a little bit of relief on the energy price front. Energy prices aren't up quite as much as they had been, and that's helping consumers' dollars go a little bit further. But unfortunately, as you mentioned, there's not enough of those dollars out there right now, especially with the softness in jobs growth. You know, I agree with Mr. Lazier, though, that we can't put too much weight on a particular month. The trends aren't encouraging, but they're not telling us that we're going into recession.
The economy needs to add about 250,000 jobs per month to make a serious dent in this unemployment rate. Are today's numbers the impetus that Fed Chairman Ben Bernanke needs to begin another round of asset purchases? And with interest rates already at 0, would a third round of easing accomplish anything?
Well, let me begin with an attempt to answer the second one. The second answer doesn't really matter. It's whether or not Mr. Bernanke feels that he must do something or attempt to do something. How confident he can be, or anybody can be, and whether another round of quantitative easing would work is almost beside the point. I think the Fed is going to try. Now, I don't necessarily, I'm not convinced yet that what the Fed's going to go for in September is a whole full-blown quantitative easing. I think there could be some marginal changes in the Fed's balance sheet, lengthening the average maturity. The Fed might also do something like link its future policy courses, changing the guidance as it did last month, but change it in a way that links it to the unemployment rate or the CPI rate of inflation going forward. Those are some things that the Fed can do at the margin, and the objective here would be to reassure confidence and provide some expectation that the economy isn't going to be allowed to slide into recession. At the end of the day, the Fed will probably attempt to do something, though, on the quantitative side as well.
And David, speaking of confidence, as we've been mentioning, next week President Obama addresses the jobs picture when he speaks to a joint session of Congress. What does the president need to say? What does the Congress need to do to get this nation's economy firing on all cylinders? And perhaps even secondarily, is there the political will, the political courage to do something for a nation that desperately needs action?
Okay. I think that the president has already laid out a number of options, some of them good, some of them not so good. And we're probably going to hear, I don't think we're going to hear things we haven't heard before, but he is asking for primetime coverage on the opening night of NFL football on Thursday night, and he's going to get some attention on that. Now, what specifically he's going to propose, I'm not sure. What I'd like to see him propose are things that focus on the kinds of reforms on entitlements and on the tax system that will provide businesses with confidence, so that they have the confidence to hire because they know what the future, more certain about what the future looks like. I think we will get proposals, for instance, extending unemployment insurance benefits for another year, extending the payroll tax cut for another year. The problem I have with that is that every year we're going to face the same question. If these temporary extensions simply, in the expression, kick the can of reckoning down the road. At some point, we're going to have to either permanently lower those taxes, or we're going to have to face the fiscal drag that going back to the old tax regime would give us. So I think we need to have a little bit more thought around how you change tax policy in a way that permanently increases and incentivizes spending and hiring.
Yeah. David Resler, Chief U.S. Economist, Nomura Securities, joining us from his office here in New York. David, it's always a pleasure. Have a good weekend.
Thank you. You too.